Hello and welcome back to the Bitcoin Cash podcast, following Bitcoin Cash on its rise to global reserve currency. This is episode number 24, the Cryptocalypse and predictions. Today is Tuesday, the 20th of July, 2021. I'm your host, Jeremy, and I have been doing this show for nearly 6 months exactly. So the first episode here, number one, white paper whitewashing in history of the flippening, was the 23rd of January 2021. So it's the 20th of July 2021. And so as a result, I thought it might be good, no guest today obviously, I thought it might be a good time to review some of my previous content, some of my predictions that I've made, and we can see how that panned out or didn't, as the case may be, and also to look forward to the next 6 months or the next 6 to 12 months of cryptocurrency, what I think's going to happen, and take a look at some theories that there are in the market right now, and get my takes on them. So I'm hoping that this one will be a bit of a prophetic episode. We'll see, but I'm gonna try and lay out a few predictions here that we can come back to at the end of the year or next year, or in hindsight, and see how it goes. It's nearly 6 a.m. here. I've been up for the last hour and a half preparing this, so you all know I love crypto. Just couldn't sleep, and had to get this episode out to you, even if I'm going to be wrecked at work today. So let's just get into it. I thought, as well, in reference back to the early episodes, I thought maybe, let's just try and freestyle this episode a little bit and see how it goes, like I did the early ones. So this is going to be a bit off the top of the head. I've got a bit of a plan, but I haven't done it all with the slides and stuff like how I usually do it. So the show's been going about 6 months now, and just yesterday I released, as well, just to quickly touch on, or not yesterday, on Sunday I released my song. That was the secret project that I've been working on, Disloyal, so everybody can check that out and maybe get some cryptocurrency vibes. I thought Bitcoin Cash could really use a bit of a protest rock song to help spread the idea and the message for all the people that don't have all all day to listen to me talk for hours and hours about it. There we go. That's it. A bit of a preview there for anybody who hasn't listened to that, but I'll leave a link, and people can check that out if they enjoy that. It's been pretty well received. A lot of people commented that they really liked it. It obviously does have some swearing. It is a bit aggressive and so on and so forth, but that's rock and rap music for you. So that's just how I feel. That's just the fact. So if anybody doesn't like it, well, tough. That's kind of not the point of those genres, to be appealing to everyone. Right, so let's crack on then and get straight into the theory. So right now, the price of Bitcoin is $29,712. Ethereum at about $1,740. Bitcoin Cash $394.72. This might be the lowest that it's been in the whole run of this show, or certainly at the lower end. So we've seen a bit of a run up from when the show started. It was about, I don't know, $400 and something, I think, and it went up. We've been followed it all the way up to about $1,500, and now back down to about $400. So been a wild ride. I hope everybody's been enjoying it. Crypto never fails to disappoint in terms of volatility and excitement there. So let's also have a quick look here. So one BTC now buys about 75 BCH. So that's been, again, also the ratio has fluctuated quite a lot. So I think it started out at about 70, no, maybe I can't remember, but it was like 90-ish to 1 or 70-ish to 1 or something like that, and it went as low as 118 to 1, and then it went up as high as 35 to 1. Now we're back to 75 to 1 BTC to BCH, so or 1 to 75 BTC to BCH. So the definitely volatile in that respect as well, not just with BTC and BCH versus the USD, but versus each other. So long-time listeners of the show can see that it's always volatile, right? Things are always changing, and so in the long run, things maybe never play out how you expect, given all that volatility along the way. Right, so skipping past all the usual stats and stuff we look at, the news, everything like that, I just want to get straight into the predictions and the grand theory of the markets that I have here. And so we're going to start on Twitter. This episode is going to have quite a bit of Twitter posts that we're going to be looking at, because I want to look at some of the predictions that have been made in the last couple of months and where things are at now, right? So in general, maybe let's start with this one then. My prediction from June the 22nd, I made this tweet here, and it says, heading into the hashtag Cryptocalypse, which I have coined. So hopefully that catches on or something, because that would be pretty cool. But that's what I'm going to call my theory, is the Cryptocalypse. Hashtag Tether blows up. Hashtag Bitcoin investors realize they're all in a Ponzi cult. All coins suffer massive damage. Hashtag Bitcoin Cash rise in the very long-term aftermath on the strength of real utility. One last crash, then crypto takes over totally. So this is my general theory of where we're at. So this was from the 22nd of June. So if we go back here and we look at the price of Bitcoin at that time, here we go. Load up the data, right? So yeah, obviously we can see in the last months since this show has started, Bitcoin started in about the $33,000 range, had a bit of a dip down to $30,000, then went all the way up to $64,000 was the peak in here somewhere, in about early April, and then it's been in the high 50,000s in May, and then crashed down, and then in June and July has been in the 30,000s and sort of trending lower, and has just now in mid-July dipped back under $30,000, right? So at the time when I made this Cryptocalypse post, let's see here, 15th, it was more the 22nd. Okay, it was about $32,000. So in the same sort of range, but since then we've just seen things sort of slide a little bit further off the cliff, and I think we're going to keep going. And this kind of comes from a post I made even a month earlier than that, in May the 19th, where Colin Talks Crypto, who I'm a big fan of, and we're going to discuss some of his predictions and some of his analysis in this video as a counterpoint to my theory, because he sort of has the opposite theory. So we'll take a look at his points and take a look at my points, and then obviously it will be fun in 6 months or 12 months. I can review it and he can review it, and we can see who was right or who was wrong or whatever, right? So that's always fun. I think hopefully he'll enjoy that and enjoy this video, and I think I will too. No matter how it turns out, he's a pretty cool guy. So I'm sure he'll be happy to admit if he turns out wrong, and I will be too, obviously. So he said on May the 19th, I'm going to call it now, 30,000 was the bottom for this correction. And I mean, we didn't go into the exact details of what was the time frame for that, right? But basically he was bullish about Bitcoin dipping down just here, where in May, when you can't even see it on this chart because the time frame's not long enough, but it basically dipped right down. Or not, the time frame's not short enough for the individual segments, but it dipped down to 30,000, and then he was actually correct. Then it did come back up, and it was in the 35,000, the $40,000 range, and now it started sliding off again. And so I said, I'm making the opposite speculation. It's not a correction. It's the end of the hashtag Bitcoin bubble. Bitcoin's crash to sub 20K will drag down the entire market. Recovery will see promising projects, e.g. Ethereum, Bitcoin Cash, surpass a Bitcoin that will be relegated forever. So that was my theory at that time, and obviously I'm sticking to that, and I'm going to expound upon that and give a bit of a full rundown of all my reasoning, so we can see in hindsight what happened in the future, and also have a look at my some of my predictions from the past, right? So let's start here with our usual stats that we take a look at here. So the transactions, so Bitcoin Cash spiked up over Bitcoin. Right now it's doing about, this isn't right, yeah, here we go. Get the latest transactions in there. Okay, about 70, 77, 60,000 transactions per day for Bitcoin Cash, and Bitcoin notably down to 166,000 transactions for many years. If we scroll this back out, it's been in this 300,000 ish transactions, and then just over the time period of this podcast, basically it's gone from 350,000 transactions consistently, and now it's just slowly trending down and down and down to 187,000 transactions. So the actual amount of Bitcoin transactions made per day has effectively halved in that time, right? And we're going to come back to why this is important later. And then here we also have the Bitcoin to Bitcoin Cash sent in USD historical charts. So through the time span of this podcast, I sort of picked up on it here in January, where Bitcoin was doing 33 billion and Bitcoin Cash was doing 6 billion. And I sort of said Bitcoin Cash would make a bit of a run up and keep closing the gap on Bitcoin, which is what happened. And then as I got to here in May of 2021, I was sort of expecting, well, maybe Bitcoin Cash can even just keep going. So I was wrong about that. But instead, Bitcoin has decreased it's gone from 33 billion up to about, at the peak, 73 billion sent in one day. And now it's fallen all the way back down to 11 billion. So huge drop off there. And Bitcoin Cash obviously got to its high at 35 or 32-ish billion, or I don't know. There's one day in here where it is just, here we go, 26 billion, and it was 2 billion ahead of Bitcoin, but then has also sort of fallen away a little bit, and now is at 5 billion relative to Bitcoin's 8 billion or 4 billion to 11 billion. So you can see in here that it's been staying in the action, and given that, like we saw, the price difference still remains kind of 75 to 1, the actual amount of commerce, it's only 2 to 1 or 3 to 1 on any given day, whereas back here it was let's see, when it started this podcast, it was it was already starting to catch up a bit there, but the ratio has still decreasing constantly. So it's pretty good news for Bitcoin Cash. Right, so to understand this entire episode, how is everything going to fit together, we need to review how a bubble works. So this is this classic graph which has been around forever, that it's not even specific to cryptocurrency. I don't know who invented it or who came up with all this stuff, but it's pretty much explains exactly how the tulip mania worked in the Netherlands, hundreds of years ago, and how stock market bubbles work, the dot-com bubble, how crypto bubbles work, because it's all the same. It's always psychology. It's always, the way people operate, especially in cryptocurrency, repeatedly over and over again. So you've got the stealth phase, things start out pretty quiet. There's a bit of a takeoff, so the price rises a little bit. people get a bit excited. They think, oh wow, this is a bit overvalued, like there's a bit much going on here. So there's a bit of a sell-off there, a bear trap where somebody, who thinks, oh no, that was it, we've just seen the rise and the fall and that's it. So they sell out. Then things really kick off. You get into the media attention and the mania. Everything just goes absolutely crazy. The price goes through the roof. It kicks into greed, delusion. New paradigm is the top point, right? We're changing the world. It's this. We've discovered, a leap forward. The price is never going back down again. Everybody needs to buy, that kind of thing, right? Then you have a little bit of a crash because it peaks out a bit too much. So there's a bull trap with people thinking, oh, I'm going to buy the dip. It's just correcting. So they sort of get in there. And the price comes back up a little bit, a return to normal. So everybody thinks, no, that's it. We've stabilized. It's all good. That was just the dip. And then you have fear, capitulation, as everyone realizes, wait, this is a massive bubble. Like the actual fundamental improvement in the value of your stock or your crypto or whatever over the short time span of this cycle cannot justify this. So everything crashes way back down. You get into despair. Everybody thinks it's all over. Game over. Just sell out now. The media, this is when they're most writing articles. Oh, we knew it. Bitcoin was just hype. It's all a fad. Look at all these idiots who thought they were in the new paradigm, 1 month ago or whatever. And then sort of a return to the mean. So the important thing as well about this graph is that it's not flat. There is some growth between the start and the end. Like the value did increase a decent, a non-trivial amount, let's say. So things do end up higher than when they started. But obviously in this cycle, they get way out of bounds in terms of the, especially to the upside, the amount of the price relative to the actual value, which is slowly increasing at a sort of more consistent rate, right? So this is how a bubble works. Very important to understand. So if we have here, look, we can almost see if we take a quick look at the price. Again, I forgot to mention as well, this is going to be a very visual episode. So for any of the audio listeners, this might be a really, really good one if you don't usually watch the YouTube video to load it up and watch it with the graphs and everything. I think that will make it a lot clearer, but I'll do my best to explain. So with that bubble graph that we were just looking at, you can see it here, right? Okay, so if you can imagine if we could zoom this in a little bit, but this was like, when I got involved in cryptocurrency in here in 2013, so the price was in the 400s, then it went up to 1,000, or on Mt. Gox it was as high as $1,200, new paradigm, etc., and then crashed off a bit as everyone realizes that was a bit much. Okay, and then it got down to 400s, and then 300s, then 200s, right? Despair, everything like that, it's all over. The community kept plugging away at it. There was the block size war in here, and then after the block size war kind of was finishing up a little bit here in August, Bitcoin Cash forked off. And so let's just briefly do a bit of history right here. So in these bubbles here, so this 2013, there was one smaller bubble, which was because Bitcoin was shown to be viable on the Silk Road, that people were trading drugs and stuff. That then the Silk Road got shut down, so the price crashed. And that was when I heard about it and subsequently got involved. And then later that year in December, it was called the China Rally, because Mt. Gox, which was the biggest exchange at the time, the price kept going higher and higher, and a lot of investors in China got really interested. BTC China and Huobi were the big exchanges rolling at that time. And so then the price, went up to like $1,200, and it was all, very exciting. The community felt like it was breaking through, etc. But obviously it all sort of ended in disaster when Mt. Gox turned out to be a fraud, and they didn't have all the coins that they had, and they stopped people withdrawing, and then it all sort of fell apart in this huge Ponzi scheme. And so, the price crashed off here. So then you had this, the block size war, like I said, and then after Bitcoin and Bitcoin Cash split off in August of, the 1st of August, 2017, so we're actually coming up to the 4-year anniversary of that, which is pretty exciting for Bitcoin Cash, that we're still here and still kicking. August 1st, a significant day for Bitcoin Cash, but not for Bitcoin community. I guess they won't really pay any attention to it. But anyway, they split off there, and so then the block size war was sort of resolved, or I guess the Bitcoin BTC community was free from having the Bitcoin Cash doubters such as myself all complaining about the block size and everything. And so the price started going through the roof here. So from $2,000 up to $17,000 in December of 2017. So important to note that the price here in December 2013 was at a bubble, and then again in December of 2017, so about 4 years later, so it gets up to New Paradigm, etc., $17,000. Everybody realizes, wait, this is a bit much, as per usual. And important to note here, the fees went absolutely through the roof at this time, because obviously the BTC side of the fork, they were the small block size. So they thought, look, well, it depends who you ask, but they basically said, we're going to have expensive fees on the main chain. We can't have cheap fees. And this is what the Bitcoin Cash side said. Look, obviously that's like, who would want to use an expensive currency when they could use one that was cheaper to trade? That doesn't even make sense. But because they had the brand, the Bitcoin BTC crowd, they had the small blocks, and that was fine. And then they had this huge price rally, and because more and more people were trading, and because we were at the cap, obviously the fee price went up, and it went up and up and up. And it depends who you ask, but in my mind, the fact that the fees were going through the roof, that was what popped the bubble, because people realized, oh, this is not going to absolutely take over the world if the fees have gone in the last week from $20 to $50, and then how high could they possibly go? Like, obviously it's not viable. At some point everybody realizes that. Other people might have different theories for why the bubble would have popped, but that is my theory. And so if we go here, I think at the end here somewhere I have a chart of the fees. Here we go, the fees. So you can see here, look at this huge run up, right? So the fees were, $1 or so, which was in the block size war. They getting up to $2 or $3. So that's why there was the block size war, because the community that is used to having fees of, less than 1 cent is suddenly like, fees at $2. That's a huge increase. That was absolutely unacceptable at the time. But then, with the small block size, they got to keep the Bitcoin branding, and they went through a price bubble and it got a lot of attention. And lo and behold, the fees, went through the roof up to here, up to as high as like 52, 55-ish dollars at the peak. And then the price crashed. And as we'll see in a moment, we've had the exact same thing happen here as well. Look, the fees were then low for a few years between February, March of 2018 after the bubble through until January, and then they started creeping up again as more usage built up on the chain. And then with the recent bubble starting in October of 2020, and as the price skyrocketed, so too did the fees. We had the exact same thing and look at how well this maps to that bubble graph as well that I was that we looked at before, with the initial run up, and then the bear trap, and then the new paradigm, and then here's the bull trap, and then back down as well. And then the same thing here, right? You had a run up, you had the the bear trap, then the fees were back down from $10 down to $2. Then there was another huge run up here. You get to New Paradigm, where the fees are more than $65, and then obviously that pricked the bubble, or at least that's my interpretation of it, but other people might have other reasoning, and then crashing back down. And so now the fees on Bitcoin are back down to only about $2, but it seems, at least if you take this analysis as correct, that bubble has finished, and we're sort of not going back, right? So Okay, so let's have a look here. So if we go back here, so yeah, and obviously, so we had the 2017 bubble, you had things meander along here, and then in October of 2020, the price is about $12,000, huge run up starts. In January, this is about where I start the podcast, because this huge explosion in the price of Bitcoin has got me more interested, and I've joined the scene a bit more again, also because Bitcoin Cash A had forked off from BCH, and so a combination of those two factors plus everything I talked about in episode 1 of the podcast got me interested again. And I also mentioned on my last episode at the end, the very last section, Mark Demeisel, I talked a bit about that as well too. But so I get a bit more back involved here. We see the exact same pattern, the run up to 38,000 ish. Then there's the bear trap as the price crashes off down to $33,000. Then a huge run up here, 58,000. It gets up to 64,000. In my opinion, this point here, that's new paradigm, etc., etc. And then we just crashed off here, right? And maybe this was a little bit of the bull trap with the price back up at 40,000 and now here at 29,000. And so my prediction obviously is that we're going to keep, crumbling away down here and then be back into a period at the bottom of the cycle, which typically, again, so this is in 2021, and the previous one was in 2017, and then the previous one was in 2013. So it's about a 4-year cycle, right? And that's related to Bitcoin's halving cycle, where every 4 years the amount of new Bitcoins per block halves, and therefore the inflation rate of the currency, which slowly decreases over time because the new supply is related to an ever bigger existing supply. But at that halving, obviously that changes the supply and demand dynamics quite significantly, right? So that's my theory, is that we've hit the top, new paradigm, and it's all over, and it's all sort of blowing up at the moment. And so, but Colin's theory, which we're going to see in a minute, is that this run up here and all this price action, this is just the small kind of sub peak, which is like the in 2013 when there was the run up, like I said, with the Silk Road, and it went up to $250, and then it kind of crashed off back again to $80, and then it did a later run up to $1,200. He thinks, twice in the same year, it wasn't separated by that 4-year span. He thinks that's what we're seeing here. And so this is the sort of the Silk Road equivalent of, we've had a smaller run up, and then we're going to have a monstrous run up after this, up to, from 30,000 up to 100,000, or you'll see, he says even up to like as high as 300,000, right? So the exact numbers is not really important. What's important is where we are sort of in the cycle, right? So let's take a look. So my theory is the Cryptocalypse, Tether, and we're going to go through all this, Bitcoin investors, and everything's just massive damage. But in the very, very long run, Bitcoin Cash is going to come out good out of all this. Okay, so let's carry on a little bit here then. So, okay, so we've got the bubble stuff here. Okay, so let's take a look here at, I want to just point back to my episode from the 18th of March, 2021, which was called, it was episode number 10, and it was called Cryptocurrency Gets Cool and the Bitcoin BTC Bubble. And so I didn't go all in detail into the pricing of everything, but just have a good listen to this section from March. So let's say in March, the price was, let's see here, Thursday, March the 18th. So the price was $57,000, nearly $58,000. And the peak of the bubble was under a month later at about, $64,000. And we're now at $29,000 or nearly $30,000, right? So with that context in mind, let's have a bit of a listen to what I thought about all of this in 18th of March 2021.
So, and I think that's great, right? So, this all comes, right, in the context of the Bitcoin bubble, which is very, I don't know how to say, but it's almost a bit destined, really, is that Bitcoin has gone up and now it's hit over $60,000, and it's become this global story in a sense of cryptocurrency reaching new highs and everything like that. But even though its price is so ridiculous and it's at such a point of finance that it's worth more than $1 trillion, right? Which was, if you told somebody 8 years ago Bitcoin will be worth $1 trillion, they might think, oh yeah, that's never ever going to happen, right? Especially because it's now been 12 years, and there's this stat, right, that Bitcoin took 12 years to get to $1 trillion, and Google, one of the most phenomenally successful, globally adopted products and companies in the world, took 22 years, right? So Bitcoin is nearly twice as fast as Google to acquire that amount of financial relevance in the world. So it's done that on the back of this bubble, right, where it's gone from $10,000 to about $60,000 between October of 2022 and March of 2021. And that in itself isn't really that noteworthy to me, right? This is not a new thing for Bitcoin, the fact that it's in a bubble like this. It historically has always had this pattern where it meanders along for a few years, then it gets hyped up, it goes viral, the price skyrockets, then it crashes, and it finishes higher than the baseline of where it was before, but there's sort of a very volatile up and down spike. So if we zoom in on what now looks like quite a small bump, the last one, which was in November 2017 of January 2018, where Bitcoin went from about $1,000 up to $17,000, and then it fell back to down around $3,000 or $4,000, right? And then it carried on until we got this latest spike. And before that, in 2013, November 2013, January 2014, it kind of did the same, where it was about $300, and then it had this huge run up to $1,300, and it crashed back down, and it ended up, I think it was about $500, $600 at times there, right? So this cycle is very well known. It's not necessarily that noteworthy that it is in a bubble right now. But the difference, I think, having been in those bubbles, and there was even more bubbles before that, right? When I'm going to do a whole episode on Bitcoin, the bubble cycle, and breaking down every single bubble. I'll do that on a different episode to focus on it. But just the essential idea that this is not a new phenomenon, I think bears repeating, because for me, this time it is quite different, which is that even though Bitcoin has had this huge upwards increase in...
Right, okay, so hang on, just to cut in there for a second. So obviously you can see I pointed out all the signs of the bubble, kind of what we're looking at right now, right? I want to just emphasize that, this is a consistent story that we're telling here, right? And so now let's just have a listen to what I thought about the status of the bubble there. So I did actually get quite close to the peak when I made this episode, but I wasn't predicting that was the peak of the bubble. So I don't want to say that I was a price genius of getting the peak of the bubble exactly right, but I think I did point out pretty effectively that it was in the main bubble phase. And so let's just listen on about the texture or the difference in this particular bubble.
In its price, it hasn't gone viral. Every other bubble, all of the previous bubbles, it came from some new breakthrough in the community, right? The price was obviously going through the roof, and that makes everybody jubilant and overexcited, and the community goes absolutely bananas for a while as new people are just flooding in and everybody's interested, and Bitcoin just is breaking records, and there's news stories all around the world, and everything like that. But it comes with, oh wow, this new huge retailer has accepted Bitcoin, and it would come from a big new step towards becoming the global reserve currency, exactly like I say in the tagline of this show. This time around, that hasn't happened, right? So I think here, yeah, so I've got these pictures that I took in London in the last week, where I've been seeing these signs. This company Luno has made these ads, which say, so they've got one here which says on a bus shelter, which says bus stop, says find out why everyone's talking about Bitcoin, and then a picture of the Bitcoin logo. And then they have another one here which was in the underground, which says if you're seeing Bitcoin on the underground, it's time to buy, and then the same picture of the sort of Bitcoin logo type of thing. So even though there is signs of Bitcoin spreading into the general population and appearing everywhere, right? If you're not somebody that regularly follows cryptocurrency, this is how it appears to you. You just forget about it or whatever, and then every couple of years, suddenly it's everywhere for 3 or 4 months. Everybody's talking about it, and then it dies off, and you think, okay, glad that's over, right? And then suddenly it does that again. And it feels like we should be in one of those periods now, and we are to some extent, in the sense of that there's these ads. I've also seen them on the red buses, right, in London. There's been a bunch of them around. But even in these ads, it's about the price. If you're seeing Bitcoin on the underground, it's time to buy, right? It's not, the ad does not say Bitcoin is taking over the world. It does not say 35 merchants in your area now accept Bitcoin. It doesn't say have you traded Bitcoin for a Coke with your friend yet, or have you bought a sausage roll or something, right? It's just about the price. Even the advertising is about the price, when the advertising should be about, oh, this is the future of money, and it's gonna be global reserve currency, and everybody's trading shit, or maybe it's hyping NFTs, or whatever it is. But even though there is this sort of advertising for Bitcoin, there's no actual excitement, right? Tesla accepted Bitcoin as a bit of a publicity stunt, but they're not really doing a lot of commerce. It's not like a giant supermarket chain is going to accept Bitcoin because the fees are too high.
Right, so as we can see here, there's kind of these ads then later got banned for being too price hypey, actually, and being sort of consumer financial advice, and Luno had to change the text, so that was quite funny. And then obviously, as I said, the Tesla accepted Bitcoin as a bit of a publicity stunt, and they weren't doing much commerce. And what do you know, a couple of weeks or a month maybe later, Tesla stopped accepting Bitcoin. So it did all turn out to be a bit of a publicity stunt, or at the very least, Elon Musk discovered that this was not going to be feasible as the global reserve currency. And so it was exactly as I explained here, that it was nothing to do with, it was all price hype. It was not on the track to becoming the world reserve and all that sort of stuff.
No, I don't know, and I can't see any evidence anywhere of anybody earning Bitcoin, swapping over their jobs to earn Bitcoin, or spending Bitcoin at merchants. There's not really any new commerce, right? It's just turned into this financialized bubble, where previous bubbles, like I said, it would come from a big retailer like Steam, when they were selling online games, obviously, and they announced they're accepting Bitcoin, and then lots of people were buying these games from them, and I guess the employees of the company were thinking, wow, look at this new revenue stream we've got, and other people could look in from the outside and see, oh, okay, look, it's a real currency. It's actually happening. It's not just something that you trade on an exchange hoping to get rich, right? That there is an actual fresh economy being created here, and in this case there's absolutely none of it. So it just feels a little bit hollow. to be honest. This whole bubble to me, it just is different. You can sense in the community that it's not like the previous ones, which was such a celebration of cryptocurrency spreading around the world. This time it's like, well, the price has gone up, and I mean, obviously, people who are invested are excited about that, but they're just excited about the price going up. It's not the price is going up as we're breaking through to the mainstream, and as more and more people are trading Bitcoin, and as my friends will now accept Bitcoin when I want to pay them back for a beer because it's really hyper. And it's nothing like that. Nobody's doing that. And I think the listeners can probably relate, because I doubt any of them, any of you, I doubt any of you have seen that anywhere, that suddenly everybody.
Actually, this is interesting, because this is very, even though I didn't know this at the time, this was very prophetic of the meetups that I went to, that I've talked about, where I went and I was in the Crypto 101 meetups in London. There was only 3 of them, and it seems like they've stopped running now. I mean, I've left London, so I wouldn't be involved anyway, but this was exactly my experience that I've talked about on the podcast, where I went to them and I saw all these people, and everybody was buying crypto on the exchanges and so on and so forth, but nobody was really talking about using it or shopping for things with it, or and even just getting out my phone and sending some to a couple of people. And everybody was just not used to that idea of cryptocurrency being traded peer-to-peer and not on an exchange as a sort of speculative asset. So yeah, watching this back now, it's a little bizarre, but that tracks exactly with what ended up I ended up seeing just a few weeks afterwards.
Everybody's trading Bitcoins. No, they're not. If they are, they're doing it on an exchange to try and make US dollars, or to make some sort of fiat currency. They're not buying real goods and services amongst themselves, right? And the reason is, of course, that the fees. It's just so expensive, right? So over the last year, it's got here April 2020, the fee was about $1, and it's just sort of slowly been creeping up and creeping up. So then in June it was closer to $3 or $4, and then by August, okay, now we're in the $6-ish range, and then November 2020, okay, it spiked up a bit and it was like $12, and then okay, January 2021, okay, between about the $6 to $15 or $16 range, and then February 2021, the lowest it was at $12, but up to even $24, and now in March, the lowest it's been at $13 or $14, and up as high as nearly over $30, right? So the fees are just ramping up, and probably again I'll sort of think that it will happen kind of at a faster and faster rate, because when you have a cap on something, if there's any increased use of the currency, the only lever is the fees, and the fees just climb up and up and up and up. And as more and more people want to be transacting their Bitcoin, when the price drops, there's just so many people that they just want to cram through their transaction that there's not really big respites in the time where the transactions aren't super expensive. And maybe previously there was, right? And that's why Bitcoin Cash was not necessarily taking off until quite recently, because even if the fees were slowly getting more expensive, well, there wasn't really that many people that were transacting for real goods and services, right? Where it's quite time sensitive, because if you're sending it to a cryptocurrency exchange to trade around, well, okay, if the fees are a bit high or it's a bit unreliable, well, I mean, it sucks. You sit there and fret about it, but it's not the end of the world. Whereas if you're at a shop and you're trying to buy a donut and you try and send it and it doesn't work, and the merchant's looking at you like, what's going on? But Bitcoin was not being used in those use cases, so it didn't really matter so much that the pain was not felt by the end users as immediately as I expected, or as any, I think, of the Bitcoin Cash or the original Bitcoiners expected, because that was what we used it for. It was used for buying and selling goods and services in a real economy. So these fees have just been ramping up, right? And so I checked in on our Bitcoin.
Right. So yeah, you can see, like, we're going to touch on this again in a second, but as you can see, my story is sort of consistent here, which is that exactly like I said, that the fees would go through the roof, which they did here. So they went up here, $30, bam, skyrocketing straight up to $65, and then what do you know, the things all had to come to a bit of a crashing halt as everybody realized, wait, this is a little bit unviable. And I didn't actually say in that previous clip that we were listening to there, I didn't say that would pop the price bubble. I kind of wish I had, or maybe I didn't want to be too premature about that. I don't know, but so I didn't say that, so that's not on the record or anything. But obviously, it did, right? At least to some extent, it did crash off the price afterwards. So we can see the bubble here was brought to an end by the fees. Yet again, here we go, the bubble brought to an end by the fees. So let's okay. We're gonna see Colin's theory here in a second. But so let's just have one quick more little segment of me, and then we'll move on to Colin's theory.
Coin, from which I was banned many many moons ago, but which has committed itself to this pathway of capping the block size, and anybody who has any alternative ideas is just a heretic and needs to be cast out and censored from spreading their evil ideas to anybody else. But I looked on their front page, and of course, like I was saying, there's been a lot of hype about the price, right? So people, it's at all-time highs. People are really jubilant and excited. But despite that, on the front page, I found this post, just coincidentally, the one time I checked in on it, which is by this poster, Summer Lover 69, and they say, if Bitcoin is going to be mainstream, we need to move on from not your keys, not your coins. Right, so this should be red warning lights, should be sounding claxons going off in the minds of any BTC supporters who actually understand cryptocurrency, because this saying, not your keys, not your coins, really does sum it up, which is that the idea that the whole point of a cryptocurrency is, like I was explaining with the NFTs, that they cannot be faked, but they only can't be faked if you're the one holding the keys, right? In a bank, you give your $10 to the bank, and then you just trust that the bank is not going to hand it out to somebody else, and when you go back, it'll still be there. But of course, the bank does hand it out to somebody else, and then when you go and get it, well, if some other sucker, if you aren't getting their money, if everybody tries to withdraw their money at once, it's called a bank run, and there's not enough money to go around, right? And so cryptocurrency fixed that by having the blockchain keep perfect and undeniable and publicly verifiable track of who had what, with no central person able to sort of change the numbers to their own whim. So that's the point of cryptocurrency, and I urge all the listeners to this call you should be looking after the cryptocurrency in your own wallet. If you want to buy some, obviously you can go to exchange and buy it, but don't just leave it sitting in the exchange, because if that exchange goes bust, or they vanish, or if the government decides they want to tax those coins or anything, they can just do it. That's if they're not your keys, if you do not own the private keys in your wallet, on your phone, or on your desktop computer, wherever you have them, if it's not in your wallet, it's not yours, basically. If it's with some other service like PayPal or like Revolut or like Robinhood or anything like that, you have essentially fake cryptocurrency, and you're just hoping that nothing goes wrong with it. So obviously there is a burden. So if you
Right, so we're not going to follow on too much more of this, but the essential point here, and we will come back to this holding onto your own keys and your own coins idea as well in a moment, a bit down the road in this video with the predictions, but so the price was going absolutely through the roof, and this is where all of the the Bitcoiners on Twitter, they were all putting these laser eyes on their profile pictures and saying laser ray to hashtag laser ray to 100k. Michael Saylor Twitter. Look, let's just have a quick look at it. But there was like all of them had these laser eye things on their Twitter pictures. It was just absolutely ridiculous, and just shows that the price hype was just going absolutely, off the chain, right? And that was also where then shortly after that they had the Bitcoin Miami 2021 conference with Max Kaiser and Michael Saylor being up on stage and just shouting about, hyping everyone up with the price, and we're not selling and all of that stuff. And it was just the most Ponzi scheme like type of vibes. I'm gonna just scrolling back through my Twitter. I'll see if I can find it here. Also note here, a paradigm shift cannot be reasoned by analogy. I'm going to come back to that as well too. Yeah, so here they are at the 2021 crypto conference. Here we go. So yeah, remember that chart of the of the new paradigm? That's what a new paradigm looks like. That is it right there. Yeah. So well, this was in June, but that was a bit after the peak of the price, right? But that is just the absolute classic of like how look, this is a bubble and it's just gone too far. I got here, Bitcoin 2021 looks like fun, absolutely massive event, yet the price of Bitcoin is anemic. Why? The market is not convinced. Cryptocurrency is about currency, must be traded with low friction for goods and services. Miami looks to have crypto hype, but not crypto commerce, right? So this was after we had been over the sort of the peak of the thing, and we're in June, so we're back in this sort of lower range. They're having this huge conference, everybody's getting really hype or whatever. So the price had actually already crashed off there, but even despite that, was it starting up the next biggest run? No, that would have been the time for it. If this was in the bubble chart, if this was the bear trap, and it was then just going to explode off after here, wouldn't that have been it? Wouldn't the world have seen this huge conference going on in Miami and thought, wow, no, these guys are right? And then everybody's piling in and more attention and everything. But actually what happened was people who wrote reviews of it and stuff wrote like, wait, I went along to see what the Bitcoin conference was about. Turned out it was a bit of a cult, and everybody just thought, yeah, this is crazy. And from that conference, there was no videos that came out of people, look, everybody was buying, like some food stand or something where 100 people are all buying a hot dog with Bitcoin and just scanning their phones. There was none of that, no videos of that, because it wasn't happening. Like people even reported that a lot of the conference booths and stuff were not taking Bitcoin. So it's just this absolute mess of, Ponzi scheme, digital gold, which, what do you know, is in my prediction here. Bitcoin investors realize they're all in a Ponzi scheme cult. Okay, so Tether, we're going to come back to Tether. Right, so that's what we've got there. So that was a bit of a mess. So now let's take a look at Colin's opinion. So obviously, I want to say I love Colin Talks Crypto. I love his content. He seems like an awesome guy. I've obviously never met him or talked to him or anything, but I do follow his content. I think it's great, and obviously, it's really important when you're analyzing cryptocurrency to get a variety of perspectives. So I highly recommend people to listen to his opinions, listen to my opinions, make up your own mind. But here's his theory from earlier this month, 7th of July 2021, where he talks about his analysis of the price, relative to, you've just heard sort of my breakdown of it.
At Bitcoin specifically, this is where Bitcoin is the market mover. This is what matters the most, in my opinion, right now. That may change someday, but until it does, Bitcoin is the king. Bitcoin is the main daddy. It moves the markets. And so what Bitcoin does translates into market action for the rest of the cryptocurrencies. So right now on your screen, you're looking at TradingView. This is the BTC USD price over the past many months. And really since nearly the last 2 months, we've been in this downward trending channel. And I actually drew these purple lines quite a while ago. I drew them back around here, and they've continued to hold true more or less all the way till today. And there's been a couple of brief fake outs, breakouts to the upside, and then quickly reversals back down into this channel. And we have not broken to the upside consistently and maintained that position. And so it's really anyone's guess how long we're going to be heading downward here. So the way I see it, there's really two outcomes to the position we're in right now. There's either we continue going lower and lower, and we actually break down below this lower purple trend line, and we actually never test these highs again, and we continue into a bear market, and we continue making new lows until the next couple of years where we finally hit the bottom and we reverse and we start a new bull run. Now, I give this outcome about a 10% probability right now.
Right, so this is basically my theory. I'm taking this side of the trade, so I'm the opposite of Colin. I think this is the 90% theory. I think the opposite, which he's going to say is his theory, I think that's the 10% theory. So like I said, it'll be fun to see in hindsight which of us kind of proved correct, because it's pretty unlikely that we could both sort of wrangle it around that we were kind of right or whatever. But what he's saying is what I think, that the price is going to just keep crashing off a little bit, and it's going to end up like I said in my tweet here, that crash to sub 20k will drag down the entire market. Recovery, we'll see promising project Ethereum, Bitcoin Cash surpass Bitcoin, and so that's by the time of the next bull run or kind of the one after that, right? So I think we're gonna, off the bull run's over, way crash down, sub 20k for Bitcoin, maybe even lower, but the entire market just in absolute despair and so on and so forth, right? So let's see. So that's my half. Let's have Colin's half.
The second option for how I see it panning out is that we continue bouncing around in this purple channel here for a little while, going down slightly, maybe going sideways for a little while, and then eventually we pop down for a sharp, sudden dip down to anywhere from 26,000 down to 24,000, maybe even as far down as $20,000, although I don't think that that's actually likely. So my guess, this is just a total guess, is that we pop down to somewhere like 24,000 or 26,000 briefly. Could be a matter of days or weeks only, whereupon the Bitcoin price surges back up and never looks back and continues to blast upward massively on a bull run, breaking through the previous all-time high and going to at least 100,000, possibly as high as $300,000 this bull run. That would be option number 2, and I give that a 90% chance. And this is why I think that. First of all, why?
All right, so basically, yeah, so he's saying that, so where we're at now, obviously both of us could still be right. It remains to be seen. And so that's why it's a good time to kind of make this video. You got to get your predictions in beforehand, right? So, and the price is trending down. So he and I are both on track with our prediction, and he thinks it's going to drop off a bit and then, explode back up, and then sort of more towards the end of the year, we're going to be hitting that real new paradigm type of territory. And I think we're going to go crash down and then just be in the lows for, some time. Like, let's say, we're going to get to 20k, sub 20k, and then be under that period of time, for I don't know how long. Let's say, at least 12 months basically, right, without going up into another huge parabolic run and breaking all-time highs and so on.
Why the dip? Why do I think that there might be a final dip down to $26,000 or $24,000 before we resume our massive trend upward? And that's just because of the nature of these cycles. And I want to call to your attention one in particular. This is the sub peak in 2013 on your screen right here. And I strongly believe that we are in a correction of a sub peak, much like we saw back in 2013. I still hold true to that 100% to this day. Now, if you'll notice on this particular sub peak, we crashed down and then we went sideways for a long time. And then right here, if you can see under my mouse cursor, there was one final capitulation. There was one final massive dip downward. And then it shot up. It basically never looked back. It went up, 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 except for this little tiny, tiny dip right here, but basically up, 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 and then massive surge, breaking all-time highs. It basically uptrended from that final capitulation and never looked back. And I think that that is what we are going to see. I think we're going to see a repeat of that. So here we have the crash down from this sub peak, this sideways motion for quite a while. And look, it can take quite a while. And we haven't really seen a final dip, a final capitulation. And I think that that's what we're going to see. And when we see that, we're going to see a ton of fear, a ton of FUD. People are going to panic sell. The weak hands are going to sell their Bitcoin. I hope you're not one of them. And the way I look at it is, if this wasn't the peak, then I'm okay with waiting until the next bull run because it's only a 3x over the previous all-time high. So really just put it in perspective. The previous bull runs were at least
Right. So yeah. So his theory, yeah, we're coming up. We're going to be going into the dip at this point in time. So he's on track for that. And then it could be a few months, right? So both Colin and I agree we've got to let it play out for a bit longer. So we're only going to see by the end of the year or by maybe even by the middle of next year, right? What actually ended up playing out. But then it would be in a bit of a low point, and then it's he's predicting a huge surge as Bitcoin just goes through the roof, and that we really hit the new paradigm point and everything like that, which I think we've already seen with Max Kaiser and Michael Saylor and people on our Bitcoin posting about needing to get rid of these old ideas of holding onto your Bitcoin because it was holding back the price and whatever.
17x from peak to peak, not 3x from peak to peak. So if this wimpy $64,000 peak was truly the peak, then, when we hit a bear market, I'm totally comfortable holding because really 3x, that's not that big of a return. That's not that big of a gain from the previous all-time high. I'm in this for the long run. I'm not a day trader, so I'm okay with waiting it out. And that's my view on this. That's why I'm fairly comfortable in this situation. But like I said, I give that bear market circumstance a 10% chance of happening. And so this is why I think we're going to see that final dip, that final capitulation. This is why I'm prepared for it. I'm not going to be fearful. I'm going to be expecting this. And I would love to not see it. Maybe we'll just shoot upward from.
Right. So yeah, this he's gives some credit to the bear market hypothesis, and I'm going to do the same, obviously, right? Like I say, maybe a 10% chance Colin is right that it dips off, meanders along, and then we just hit this huge surge. Definitely anything could happen if there was some sudden breakthrough or whatever, but I just really don't think it's likely. So yeah, and then he talks here about.
So that's why I think there's going to be a dip. Yeah. Now, why do I think that it's going to continue upward? Why do I think that this isn't the peak, this $64,000 that we just saw? Why do I think that's not the peak? And I want to take a look at the CBBI, the Colin Talks Crypto Bitcoin Bull Run Index, brought to you by myself and Camille Monich. Now, in case you're not aware, this particular metric, this Colin Talks Crypto Bitcoin Bull Run Index score of 54 currently, as of July 7th, is an indicator based on a portfolio of 11 different metrics. And each of the 11 different metrics are on your screen right here. We have everything from the golden 51-49% ratio, the Bitcoin search term on Google. We have the stock to flow chart, the Pi cycle top indicator, the 2-year moving average, the Bitcoin Trello trend line, the Ruppel/Nuppel chart, show me your Nuppels, Puel multiple, the MVRV Z score, the R hodl ratio, and the reserve risk. All 11 of these combined creates a composite score of 54 for the CBBI. And these 11 metrics are very well known and respected in the crypto space. And that is why we have averaged them into one, so that we're not using human bias and cherry picking one more than the other. We're actually taking an aggregate sum and averaging that into one score. So in my opinion, this is a little more reliable than looking at one chart by itself. Actually, I want to show.
All right, so we've got the CBBI here. So first off, I love this. I think it's absolutely great. And interestingly, today, a couple weeks later from when he made this video, we're still at about the same, 53 to 54. So I think everybody should take a look at this, use it as part of your, analysis, or think about it. I think it's a very, very interesting way of looking at the market. And he's, since made some changes with updating the different the site so that you can switch on and off different indicators and so on and so forth. And I really enjoy looking at this. But my position basically is that this is all wrong, pretty much. So firstly, it's just sort of a bit of a false reasoning to just say, look, we've got these 11 metrics, so if we just average them all together in some kind of soup, that will make it more average. It's like, or more correct. It's like it's some sort of wisdom of the crowds type of reasoning. But I don't really believe that at all. Like, if you just in some areas of the world, you can get a sampling of opinions, and then there will be a wisdom of the crowds effect. But in this scenario, I don't think just throwing a lot of random different indicators in together really makes any difference, because you can see obviously they're not all really related. Like this one here, the golden ratio, it's at 93%, search term is at 21%, pi cycle top 70%, like Trollo trend line 47%, reserve is 26%. It's all over the shop, right? This is not just randomly mashing them all together. It's not going to get you anywhere close to what's going on, in my opinion. And of all these different metrics, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So he's got 11 metrics here. And for me, I think you can throw out all of them except for 1.5. I only believe in 1.5 of these metrics. I mean, the way he's so I'll talk about that in a second. But the way he's composed this these metrics is from looking at the previous bull runs, and what indicators showed that those bull runs were peaking out and stuff like that, and then he's put them in the portfolio. But to me, that's really just selection bias, because there's, like, here we've got the 2-year moving average, right? But let's say that we had, there's the 5-year moving average, or the 1-year moving average, or the 6-month moving average. If those ones had happened to be the ones that had timed at the top of the previous peaks, then he would be assuming that it would indicate the next peak, when really it's just, there's, an infinite number of different statistics you can use to correlate. Correlation does not imply causation, right? So if if every morning the birds sing and the grass grows, that doesn't mean that the birds singing makes the grass grow. Actually, it could just be that when the sun comes out, the birds sing and the grass grows, right? So there's no, just because two things happen at the same time doesn't really mean there's any causal link between them. You need to do a lot more work to establish that. And in all these statistics, he's taken the ones that happen to line up with the previous top, which again do not line up with each other at all necessarily, and just sort of put them in a big soup and said, well, therefore we'll be able to tell when it's the top. So out of these 11, I really do not believe in any of these different metrics, with the exception of the Bitcoin search term for the Google indicator. That one I believe in. And why do I believe in that one? This overwhelmingly, more than all the others combined, easily. Because like we saw, the bubble psychology is what is driving the market. And that this is the only indicator out of all of these ones that is really to do with the psychology of the retail investors. So this, basically, for me, you can just switch this on and just switch all the other metrics off. The other half that I'll give credit to is this one here, the golden 51 to 49% ratio. And that's basically talking about the halving cycle. And since the when the block reward halves, then it tends to be about 2 years later. We can see on this chart here. So the block halving, and then it tends to be about 2 years later that it starts to, that it has a run up and it hits the peak. So I don't think that this sort of 51 to 49%, I think that's probably a bit off, but I do agree that the block halving does play a part in creating the bubble cycle, which you can then follow by the Bitcoin search term. So for me, the Bitcoin search term and some indication from the golden ratio, the rest of them, no chance.
Whether we break downward to 24,000 or we just kind of go sideways and then we eventually head upward, I give us a 90% odds of reaching a new bull run peak higher than $64,000, probably higher than $100,000, and could be as high as $300,000. Very likely by the end of this year, give or take a month in either direction. Could be December, could be January. And that's what I see for this Bitcoin bull run. I've had my eye on this prize, guys. I'm going to be with you tracking this every step of the way. So if you want more updates, please subscribe.
Okay, so that's Colin's theory that we've had sort of in detail there, right? And so yeah, it's pretty clear, I think, where he and I disagree. Have we already hit the peak, or are we going to see another huge peak? Is it to do with these metrics that are looking at the price and the financial statistics and whatever, this sort of reverse, like backwards looking analysis of sort of charts and trends, which he sort of believes in, or I believe in more my own intuition basically, and my understanding of the history and the fundamentals of what drives cryptocurrency, and the price essentially being a speculation among all the different cryptocurrencies as to which has the best chance of being adopted and becoming money, like money that people actually trade for goods and services rather than they just speculate on the price. So yeah, like I said, I think the search term by far and away the best indicator. And what can you see here? Okay, we had this, the spikes in 2011 when it had a bit of a bubble there. The two peaks here in 2013, 2017, bang, huge spike. And then here, well, you can see, okay, mate, I don't know whether this is an indicator for Colin or for me, but it did go up, and we did, have the, the initial run up, but then it has since completely crashed off. So maybe this is the bear trap, and Colin's right that it will go through the roof, or maybe it just has floundered out and this run has just completely finished. And I think when you see this chart, it makes perfect sense to me in comparison to what we talked about with the Bitcoin Miami conference and all the hype and everything like that. There was no, we've had Tesla saying, I'm going to accept, we're going to accept Bitcoin, but then they didn't start doing commerce with it, and they stopped accepting it. They didn't start announcing, wow, it's been super successful, we're going to roll this out for all our products, or other companies thinking, man, Tesla is on it and they're taking Bitcoin payments, we should start accepting Bitcoin payments. And any kind of consumer adoption or groundswell of excitement, cryptocurrency is taking over, it's obviously the future. None of that has happened. And this search volume sort of indicates that. People got a bit more interested as the price was going on, but we didn't get to a big, a huge surge in consumer interest, and people have just been able to ignore it. They have just lost interest because who needs, Bitcoin? Like I said, there was those ads, but the ads on the Luno Underground, they're just saying the price is going up. They're not saying cryptocurrency is the new way to pay for stuff, or cryptocurrency is here to stay, or anything like that. It was just empty price hype. And with empty price hype, you can only get so far, and that's what we've seen. And there's not really any prospects of crypto taking off, at least under the auspices of Bitcoin BTC. So, Colin has this theory that these stats show what was the cause of the different bull runs and the sub peaks and the peaks and whatever. But for me, I think it's the opposite. So I think if you look back at these charts, you can see, so like I explained it before, There's the Silk Road. That was kind of the reason, because again, it was getting adopted. It was taking over. And then the same with Mt. Gox. And at that time, then there was still some companies kind of getting interested. Then this rally was after the block size war was over. And then this one, so we're going to talk about why did this rally occur then? What's going on here? If there was not loads of people accepting it and everything, how did the price increase so much here? And why would it not have the legs to go further? So just quickly, to bring up this rally back here in 2014, the reason that came about was in part because of this thing called the Willy bot. So I've got a quick little news article here somewhere about it. Yeah, so a bot named Willy. So like I said, Mt. Gox was this fraudulent exchange, and they basically had this bot running on it that was just constantly buying up new Bitcoins, because they're the exchange, right? So they can just program in, whatever buys and sells that they want, because they don't actually need to have any money in their account to necessarily do that. Until, of course, the users all start trying to withdraw their coins or their US dollars, and that's when it turns into a disaster, and that's exactly what happened, right? So this bot, which was known at the time, so this article is from May 26, 2014, but even this was in retrospect. There were people warning about this at the time of the actual exchange price, doing the run-up and everything like that. And they just had this bot that was just basically making up fake money out of nowhere, and therefore pumping the price through the roof. And like we've talked about with the graph of the bubble, obviously, it's sort of a self-fulfilling prophecy, right? If you have a fake bot pumping the price up, then that gets into the psychology of investors, and then you get into enthusiasm and greed and new paradigm and all that as a result, right? But you can start it with something that's completely fake, but then real people pile in, and that sends the price through the roof as well too. So you had this bot, the Willy bot. So I've got here someone from Reddit talking about it here. Willy was one of the two main suspected Gox inflation bots. Willy was buying up BTC at market price at 10 to 20 BTC at a time every 10 minutes for literally 18 months. And then So, all this price hype about about Mt. Gox and Bitcoin, that was in 2013. So, which brings us to today, in 2020 and 2021, we don't have Willy bot, but we do have Tether. So if you look here at the coin market cap, you can see here the third biggest coin, Tether, worth exactly $1 for $61 billion worth of market cap. And since each coin is worth $1, that means there's about nearly 62 billion of these coins floating around. And I've mentioned this Tether previously on the show a little bit. I mentioned it on the episode on stable coins. It was with the episode 7 with imaginary username, where we're talking about volatility. But so you can have a look back at that section. I don't want to go into all that now. But basically, the idea is that if you had $100 dollars in your bank account, then you could make 100 Tether coins, and then people could send them around, and then they could cash them in by sending you the Tether, and you would send them back the actual dollars that backed it, right? But the whole problem with that, and the reason it's distinct from a cryptocurrency, the cost of having your stable value, is that somebody has to be able to redeem those tokens for real US dollars. And that's your centralized risk that you don't have in Bitcoin or in Bitcoin Cash or other cryptocurrencies. The free market fluctuates because people just trade them for what the market just sets the value. But if you want to have a peg where it's set to a specific other asset, like a US dollar, then you have to have somebody trading those back and forth, and that person can be a huge problem. So as we've seen, and that's basically what happens with Tether, where they now have just been printing Tethers out of freaking nowhere. So like I said, there's about 62 billion of them, but back in 2019 there was only 4 billion. So there's just been this. So, I mean, even here, it was a bit of a scam. It's been known for years that this has been, a bit of a scam, right? because even, who are these unregulated guys that have all these shady practices and things going on, and they promised, we promise we've got all these, $2 billion US to back up our tethers. But of course, once you have the ability to basically print money from thin air, of course, people are greedy. They're going to start doing that. So that's what happened. And so now you've seen this huge, enormous run up in 2020 from $4 billion of Tether, which they probably already didn't have the money for, up this huge printing exponentially, just churning out the tethers to there's now like 61, billion tethers. So in this shady company, which nobody really knows much about, it has so many problems. Did they acquire, do they really have another 58 billion in their bank account ready to cash out to everyone? No, of course they don't. Of course it's a scam. So this is just the willy bot for this run up. This is how the price has just been pumped up so high, right? And so I have here, there's a video from this guy, CoffeeZilla, exposing Tether, Bitcoin's biggest secret. I'll put a link to that in the description, and people who are more interested in this can watch that. But he breaks all down how shady it is and everything like that. Really good article. But for the purposes of this episode, without getting into all the details of that, all you need to know is this is a massive scam, and now they've stopped printing because now finally the world has sort of started waking up to it, and governments are starting to look into them, and whatever, because they are basically counterfeiting US dollars. But you can see here how all this huge influx of money, like 62 billion, how that would drive the price rally that we've seen here, with the price just going through the roof. And because you don't need, it's not like 62 billions of dollars increases the price by 62 billion, because each $1 that you're buying, like there's only very few coins traded at any one time, so each $1 extra of buying can shoot up the price much higher. It's not really a one-to-one relationship like that. So you've got the Tether printing, which maps very nicely to this time scale of the price going through the roof. Some people at the top realizing this is all a bit of a scam and starting to cash out, as well as the new paradigm hype reaching a fever pitch that was just not sustainable given the actual adoption of Bitcoin as a currency, right? And of course, the same thing with the price going through the fees going through the roof, all of that contributing as well too, right? So let's see. So we've talked about that. Okay, so Tether, so that's all a bit of a scam. So that's how I think, the price has been pumped up so high in the absence of any real consumer adoption. And then the stopping the money printers of Tether, and also the fees going through the roof prick the bubble, and that's it. So I don't really see Colin's theory that the price is going to be going up to $100,000 or higher. I don't see where that's going to happen, because Tether would have to switch the money printers back on, and I don't think they're going to really be able to do that, because now the attention's onto them. I don't see it getting enough consumer adoption out of seemingly nowhere to convince everyone that it was going to take over as the global reserve currency. And yeah, it doesn't really matter about what those previous indicators said. That's irrelevant. None of those indicators tell you anything about the Willy bot in 2013. They don't tell you about the fees going through the roof or popping the bubbles, and they don't tell you anything about Tether either. So that's why I don't think they're really that accurate. So I want to also shout out here. So let's say on the bull side for the crypto markets, you have Colin, and also Mark Demisel. He has a similar opinion, so I talked with him on the previous episode. People can go back and watch that. And he likes more the crypto market as a whole rather than just looking at Bitcoin. But for the most part, and to put words in his mouth, right? Obviously, you can check out his channel and find his own thoughts and opinions, or the chat that we had. Essentially, he agrees with Colin that we're still looking for a huge run up in crypto. And then on the bear side, you have me, obviously, and then this one other guy. This is by far my favorite crypto analyst that I've found on Twitter, is this guy called Mr. Whale, at Crypto Whale. And so here's me in June retweeting his graphic that he had of Goldman Sachs setting up their trading desk in 2017, which was the peak, and then in 2021 March, that was also the peak there too, and then it sort of crashed off. And he had predicted that on March the 1st, which was, you know, very much like my March the 18th, where I talked about the Bitcoin BTC bubble in my episode, right? So I really, really, you know, I really, really like this guy's analysis. I think, well, might be a girl, right? Guy or girl, whoever. But Mr. Whale, well, I guess it does say Mr. Whale, you know, seems, as far as I know, similar background to me, sort of talked about being involved in 2013, 2014, and is a very sort of crypto realist, right? Where the problem with cryptocurrency is that too many of the people involved, they assume that they're financially motivated, obviously financially interested in it increasing in price, so they reason, you know, they have motivated reasoning. And the problem with the bears is that they don't see the other case, they don't see the good parts of crypto. But Mr. Whale and myself, I think, sort of try and strike that middle ground of, when crypto is looking on the up, well, you've got to give it credit that it's got a lot going for it. And when it's on the downs, you also got to be realistic that it's kind of falling apart a bit. So shout out to Mr. Well, and I highly recommend everybody follow those opinions for more in-depth analysis. And look, just here, pretty funny as well. Also busily calling out, like, so this guy William Clemente 3, bold claim, black swan aside, BTC will never go below 50k again based on capital flows. And then he replied, Bitcoin will 100% go below 50k again. What do you know? That's what's happened. And this sort of stock to flow again, that's sort of coming back to like Colin's metrics here. I think he has, yeah, stock to flow chart. Look, it's 94% that we're at the peak right now. Like, I don't know what this stock to flow chart is really. I'm not an expert on that, but it's mostly just hopium, right? It's telling people what they want to hear, which is that their Bitcoin BTC investment, digital gold, is going to the moon, and that's complete nonsense. So of course it's very easy to get popular, like this guy's done, by by sort of shilling that, but that doesn't make it at all accurate. So what do you know? Right, so here as well, I want to just give a bit of a mention here. So I agree with Mr. Whale here when he said, yesterday, the Bitcoin bull market is over. Now that global regulators have all eyes on Tether and they have halted all printing, prices are tanking faster than they have ever before. No Tether equals no price manipulation equals no pump. We'll eventually collapse below 30k, then 10k, right? So Mr. Whale, same theory as me, which we arrived at independently, but I'm not surprised that we've come to a similar conclusion. And so here we've got a response by David Bond, who is in the BCH community. You know, he might watch this episode. I think he's got good takes on a lot of stuff. But I would I'm putting him in here as another sort of counterpoint to, you know, on the bull side with Colin and Mark. You know, for the sake of balance, right? I want to sort of show both sides of what the community is thinking from people who I consider to be, you know, aware of what's going on in crypto, and they're not just you know, making that up. Like if there was some critic who said crypto's all pointless, or, you know, like Peter Schiff or something like that, you could just ignore their opinions. But from people actually in the crypto scene who knows what's going on, so you roughly have those two sides, right? So David Bond, again, so he's backing the bull side here. And he says, I'm sorry, but if you believe this, you're an idiot. Almost every government is printing like crazy. Privacy concerns are growing. Digitization of everything has been accelerated. Rumors of entire governments adopting crypto as money. I'd list more reasons, but I'm running out of and then obviously cuts off before characters. And then I responded down here, you're right about all those trends, but the factors at play over a 2-week period are at best marginally related to the world kicking into hyperinflation and so on. 2 years, yes. 2 weeks, no. Hashtag Bitcoin is absolutely overvalued given the amount of dumb money holding it. So yeah, I'm with Mr. Whale here. Like, obviously, David is right that governments are printing money like crazy. The world is starting to wake up that government control is a big issue. All of those trends are massively bullish for crypto in the next 5, 10, 15 years, right? Bitcoin Cash on its way to global reserve currency, right? That's what that sort of plays into. But in regards to this exact bubble cycle over the next 2 weeks, 2 months, 3 months, 5 months, those things are small potatoes compared to Tether, compared to the sort of Ponzi scheme, digital gold narrative falling apart, compared to all Tesla maybe dumping some Bitcoin, those kind of things, right? So that's kind of the two sides of the argument that we have here, and we'll see what sort of transpires. So that's kind of the backwards looking portion. So I want to just talk a little bit about the Bitcoin and Bitcoin Cash and the flippening, and just tie some of this together and looking forward to the future. So I think really that the Bitcoin BTC, they have done their dash. They've run out of time. They've had their moment in the sun with Tether pumping their price through the roof. They had their big euphoria moment, their big conference, Bitcoin Miami. We're not selling, fuck Elon, it's a new paradigm, etc. But really, their community is going to start to fall apart. I'm sure there will still be a lot of Bitcoin holders, BTC holders for a long time to come, but they're not, they're going to be hit so incredibly hard by this Cryptocalypse theory of mine, that with the Tether printers switching off, it's all going to turn out to be a bit of a sham, right? Because their community, their idea was not, we're going to trade it, that people are going to be building at real merchant services and so on and so forth. So many people are just bought in because the hype, as the price crashes, they're going to sell out and sort of paper hands it, and it's just all going to fall into a bit of a mess. And you can see here, if we have a look at transactionstreet.com, great website that I highly recommend people to look at and visualize a bit what's going on the blockchain. But here you have Bitcoin BTC doing about 2.5 transactions per second and a median fee of 21 cents, like we saw with the fees on, here we go, the fees. They've come right down. So yet again, here's more indication that the bubble is over. This was peak euphoria, everybody trading around their coins, everyone getting really excited, and now it's finished. And look what happened last time. Well, it just meandered along again for a few years before the hype started kicking off again. So if we were going to see Colin's theory that everyone was going to get really excited, then this would only be a little short run, and then bam, the fees would have to start going up again because price was spiking, everybody was trading, all that. But we've now been through 2 cycles where the market has figured out that Bitcoin BTC is not going to be digital cash. It's not going to be peer-to-peer currency for the whole world. It's just not going to, because every time the ball starts to get rolling, which it did after the block size debate, or the block size fork happened, and it seemed like they could say, well, we have SegWit and we're going to be building Lightning Network and it's all going to work out great. That was the narrative that they told then, and maybe the market could believe it a bit. So obviously once the fees got actually kind of high, that proved out to be a bit of a sham. SegWit did not really fix that much with the fees, and Lightning Network wasn't ready for people to adopt for actual consumer payments and to use as currency. And then we've just seen this second big, bubble in 2021. Same story. Are people out there trading Bitcoin around everywhere? No, it's all just Luno, buy Bitcoin. Just as simple as that. Just buy. Why? No reasoning at all, really, except the price is going up, and that's just the definition of a Ponzi scheme. The only reason to buy is because the price is going up. That is the definition of a Ponzi scheme. So, so you can see here, but the usage has dropped off on the chain. Nobody's really using Bitcoin. It's that the most developed that it's ever been up to this point, and yet still, fees are low, and they're not low because the chain is really efficient and doing tons of transactions, which is the goal on Bitcoin Cash. They're low just because nobody's using Bitcoin. So it doesn't really matter whether they have Lightning Network or whether they have scaling or whatever, because just nobody's even sending around that much Bitcoin. And that's shown also in the USD chart that we talked about at the start, and which I bring up in every episode. Like, look, it's only 11 billion worth of BTC being traded when it's 4.6 billion for Bitcoin Cash. If we switch on some of these other currencies, let's have a look here. Like Doge, let's see. Okay, so Doge even has what? Well, maybe Doge has 7 billion, right? Well, what about Ethereum's not really equivalent because it's got a different accounting method for that. But let's have a look here. Okay, Litecoin 356 million. Okay, so they've got like jack all, but Bitcoin, Dogecoin and Bitcoin Cash are both sort of in the ballpark a little bit with Bitcoin BTC. And Bitcoin BTC holders still think, yeah, we're still the biggest and the best, but their price is 60 or 70 times that of BCH, and yet they're only doing twice as much commerce. Like that should be ringing alarm bells, because with like I've talked about before, with cryptocurrencies, the network effect is key. For actual money, the network effect is key. The more people you have, the more your network should be accelerating ahead of the competition, because it has that advantage. If it's just struggling and the other coins are catching up, that means your currency is really, really in a bad spot. If you're the market leader and you're not getting further ahead, even with the power of network effect and branding, then you are in really big trouble. And so this is just one other little stat that I think everybody's sleeping on a little bit, which is the block size chart. So if we look at the all-time chart, so obviously there was only BTC from 2009 up until 2017, and then the two split. And the reason they split was because BTC was at the maximum capped block size, and Bitcoin Cash thought we want to raise the block size. BTC didn't, so BTC just stayed at that same cap, and then the transactions died off a bit and then slowly built up again, and then you have the most recent run and the fee spike and everything that we've talked about. But Bitcoin Cash split to have a larger block size because they believe that would be the more efficient path where you could handle more transactions, etc. And then for these, for the next 4 years, essentially, it has not even come close to making. I mean, there was a couple of brief spikes, but it hasn't really been making use of that capacity because they split off. They lost the brand name, and they were in the minority fork. They had increased the block size, but it didn't really have any impact. Like, it was not like if the network had split and there'd been 1 megabyte of traffic on BTC and 1 megabyte on BCH, then BCH would immediately be unleashed and could sort of accelerate ahead because it was more efficient. No, because BCH was the smaller fork and a lot of less people were using it, and it had to struggle through and find its place in the market, go through its own forks, build its own community, and so on. It has had smaller blocks for all this time. So the big block theory of proving that it's more efficient has been basically irrelevant this whole time, because it hasn't even had 1 megabyte worth of transactions until very, very recently, just when I started doing this podcast. What do you know? We started following this story, and with the noise.cash and everything, it got up to being closer to about 1 megabyte. The fees stayed low, right? When we look at this chart of the fees here, this chart, this is the Bitcoin Cash, is this red line down here. It's so small you can't even see it. And look, it hasn't even budged. It's just been flat at, less than 1 cent just the whole time. Even as the blocks have been filling up because it has a higher block size limit, so it just puts everything into the next block. And so now we had the noise.cash tip batching, but the transactions are starting to ramp up, and so the blocks are starting to fill up. And now Bitcoin Cash is using more block space than Bitcoin is, because at the same time, Bitcoin BTC has dropped off. So their fees are lower and they're fine, but that's because nobody's using it. So it's not growing, it's actually shrinking. The network is shrinking because when there's no price hype, there's no reason for anyone to use Bitcoin BTC. Bitcoin Cash is building real commerce. And so the blocks are slowly filling up. And so now we're at the point where we should see over the next 6 months, 12 months, 24 months, we'll see as the Bitcoin Cash community finally has built itself back to the same point that Bitcoin BTC was at in 2017. And they thought, look, we should go the big block route. Now we're only now going to see the payoff for that, because from here, the Bitcoin Cash community, as they grow and as they build a network effect, as more people trade with Bitcoin Cash, it won't run into one of these huge fee crises which goes on in every time BTC starts get rolling. So BCH can start to get rolling and not get blockaded on these fee issues. And at some point, this is in the very long term. Okay, my disk is almost full. I'm going to run out of space here. This has been such a long episode, but to sort of in conclusion, I think my predictions are that the Bitcoin Cash community is going to see huge. So it's going to be very strong over the next 2 years. In the Cryptocalypse that we're going to see, Bitcoin is going to be a disaster. It's going to crash off and whatever. That's going to drag down the entire market, including Bitcoin Cash. So everybody, who is in the market should be prepared for that psychologically and economically, financially. Be prepared for a huge crash off. The media to write, that it's all over. I'll be here following all the way, laughing, or picking out the best bits of the media skepticism. Bitcoin BTC will go into a disaster because their community is built all on price hype, and if they don't have price hype, they don't have much left. And Bitcoin Cash will have a tough time, but it's a battle-hardened community. It's been through a huge price decline over the last 4 years already. So people are, already there in it for the long term. They're here to build a real economy. And that's what I'm here to do, and that's what we're going to keep doing. And so at some point, after this huge crash, it will be in either the next bubble, in 1, 2, 3 years time, or possibly out, maybe even the bubble after that. But in the next 2 bubbles, definitely, Bitcoin is going to have, its next fee crisis, but Bitcoin Cash will just be flying. And that is where we get to the flippening that I was talking about in episode 1. I was going to play like some segments just quickly here. Again, I might run out of disk space, so maybe I should just wrap it up. But maybe I'll edit in a bit of a section of me talking about the flippening in January, in the first episode 6 months ago, and you can see where we're at now, and what the prediction is going forward. Right, Cryptocalypse, price crash, the whole cryptocurrency market struggles, and in the aftermath, by the end of the year, or in 12 months time after we've had that huge crash, the whole market will be in disarray, but Bitcoin Cash will come through it better than most other currencies. And also after that, they're building a real community. And so as other coins just get a bit washed out of the market, Bitcoin Cash might not be reflected in the price, but it will be reflected in the usage of the block space, the building commerce, and the momentum of the community. And at some point, the entire market will wake up to that. That might be in 3 years or in 5 years, after 1 more bubble or 2 more bubbles. I don't know exactly how it's going to play out, but that's what we're going to see. And calling it out now, so we can check back on that in 12 months, in 24 months, and longer. And absolutely open to Colin Talks Crypto. Could come on the show anytime if he watches this and enjoys the analysis. If he wants to debate about it, everybody should take both sides of the argument and see what they think. So that's it for the show. 6 months. It's been a ride. It's been good, and looking forward to the next 6 months. By then we'll be getting up to the end of the year. We can do a 1 year special or something. I don't know. But the slides and resources will be at bitcoincashpodcast.com. Thank you to all of my donators. Donations are welcome as always on the QR code on the slides. Shout out to the Telegram group. One of my listeners asked me to make a Telegram channel, so you can look in the description for that, and I just post the new episodes there. So if anybody's interested in Telegram, to get updates about it, they can do that too. And you guys can also check out my song. Go blast that shit you know, in your sub in the car while you're cruising on the highway or something. Disloyal. Hope you enjoy that, and I'm looking forward to August 1st, the 4-year anniversary of Bitcoin Cash. That's a pretty good milestone. So I might see about doing an episode, maybe something special for that episode too. I don't know. But yeah, thank you to all the listeners, and that's it. Until next time.